Hi everybody, welcome to another update on the stock screener. I got a question on SOMA and where they are standing. And I also want to clear up some misunderstandings on artisanal mining and its leverage. So let's get into that. SOMA is currently at 50 million market cap CAD. And I think it's positioned very well for the coming bull market in gold. So to give a bit of background, gold is going to go to 3,500 this year. By the end of the year, we will hit 4,000. That's the Yardeni target, and then 5,000 in 2026, 2027. So keep those numbers in mind. So the artisanal mining leverage. So some people have said that because they are going to artisanal mining, that the leverage is lower. That's correct, but there are other things that you need to consider with this. Leverage does not just come from the artisanal or not artisanal, it comes from a lot of parameters. So you can see here artisanal mining is going to 30,000 production in the long run, and the other 30,000 is from Nichi, Cordero, and all of these mines here. Okay. Now, how does the artisanal mining look like? So this is for 30,000. So if they onboard all of these artisanals, then we get to the 30,000 production. So I did a calculation, and this is the result. At the current gold price of 3,000, we should be making about 37 million CAD in after-tax profit. So if the gold price goes up, this profit will also increase because the artisanals win, but SOMA Gold is also going to win because of the higher gold price. It's a symbiosis of artisanal vs SOMA Gold. So there is leverage to gold, and this is the leverage. If gold goes up 10%, then the earnings will also go up a little bit more than 10%. Okay. I think it's about, let's say here, 10%. Then we go from 37 to 42. How much is that? 37 to 42. Let's say 1.3 times, right? So there is leverage with the gold price. The all-in sustaining cost is also going to go up. So it's probably going to be around 1850 at 3,000, and then if gold goes up, the all-in sustaining cost will also go up because of you need to pay the artisanals more money. Okay, so now let's take a look at the leverage and the misunderstanding on that. I have an Excel sheet here. Let's put gold price, let's say 3,000, and it goes up to 10%. What is the profit? This is after tax profit. So at 3,000, the profit is 37.5 million for the artisanals alone. So 37.5 million. And if we go to 3,300, then we have 42.5 million, right? 42.5 million. So what is the increment? The increment is this minus this. So that's 5 million increment. Then we add a multiple, of course. The multiple is this times, let's say, a 5 times multiple, which means if we go up 5 million in net income, then the market cap is going up 25 million, right? Because there's a multiple on the earnings. So the current market cap is 50 million. So that means if we go up 10% in gold, current, that's the market cap at 3,300. So 3,300 gold, then that would be 50 plus the extra increase in market cap due to this increment, right? So we go from 50 to 75 market cap if gold goes up 10%. Okay. So what does this mean? This is an increase of how much? Let's say 75 divided by 50. That's 50% increase, right? It's a 50% increase in market cap. Actually, we can just do this divided by this. That's 1.5. Okay, that's a 50% increase in market cap. Well, 50% increase. Let's say this minus this divided. Okay, so now we have 50% increase, right? Percentage. Okay, 50% increase in market cap. 50%. What's the increase in gold price? That's this minus this divided by this. That's 10%, right? 10% increase in gold price. Are you with me? So what's the leverage then? Leverage is this divided by this. So we have 5x leverage. 5x leverage. If gold goes up 10%, then the market cap goes up 50%. Okay? That's 5 times leverage. If you compare this to Agnico Eagle and do the same as here, increase in gold price, increase in market cap, you get actually only 1.2 times leverage. Okay? Not 5, but 1.2 times leverage. So Agnico Eagle has absolutely no leverage. Soma Gold has 5 times leverage. And this is only from the artisanals. 5 times leverage from the artisanals alone, if they get to this production. We're not there yet. Still need to build it up and add more artisanals. They're already adding some here in this year. Add some more, and then eventually we get to the 30,000, which gives us 5 times leverage to the gold price. So what does this actually mean? 5 times leverage. Well, so we are currently at how do we do this? 5 times leverage. The PE ratio currently for Soma Gold is going to be at 1.8, let's say 2. That should be already a double. So if we have 5 times leverage, then it's going to be a 5x, 10x, right? Then it goes up 100%. If you do a 5 times leverage, then it will go up 500%. Okay, so that's only for the artisanals. Okay, they also have this production. You need to add this production as well, and it's going to be better than the artisanals, of course, because the all-in sustaining cost doesn't go up with this one. With this one, the all-in sustaining cost goes up, okay, because they need to pay the artisanals more. But with these ones, that's their own ore, and there the all-in sustaining costs, should not go up because it's their own ore. So that will have higher leverage than the artisanals. And it's the same production. So I would guess the leverage would be 10x. 10x minimum leverage if they get to this amount of production in 2028. 10x leverage, not 1.2 times leverage on Agnico Eagle, but 10x leverage. So now imagine what happens when gold goes up 30%. So from here to here is 30%. And then from here to here, it's 50%. Okay. 50% increase in gold price in the coming years. Leverage that with 10x. So what do you get then? You do the math. You do the math. If gold goes up 50%, okay, we can actually do that. Let's say 4,500. What is the profit here then? Then we get to here. Off chart, it's about, let's say 60 million. 60 million. The increment is, not this. The increment is this minus this. And the multiple is 112 million added to the current market cap. And this, actually, market cap at this or 4,500. So this would be this plus this. So this plus this is this. 160 increase in market cap is then 200% increase in market cap, right? And increase in gold price is, not this, but this and this. Okay, so increase in gold price 50%, but increase in market cap is 225. So this divided by this is, and then we put number. It's of course the same leverage, but you can see what increase in market cap is. 3x. We get 3x increase in market cap just from the artisanal miners. Actually, why is this lower than this? I have no idea. But it's about the same, right? 5 to 4.5. Leverage from the artisanals alone, and increase in market cap is 3x, 200%. If gold goes from here to here, okay? Now add this production to it. So the leverage is probably going to be in the 6x, 7x vicinity, and that's only the incremental upside. Okay, that's only the incremental upside. Incremental. There's also the undervaluation upside because this is trading at 1.5, 1.8 PE ratio. Should still re-rate to a PE of 3. So you can double the upside on that. So not 6x, but probably 10x. Okay. If gold goes to 4,500 here, SOMA gold is going to 10x. Okay. It's going to go to $5. And that's what I'm waiting for right now. I'm waiting for this to happen and stay here forever. And SOMA gold is going to make a lot of money onboarding all of these artisanals and this production. In a few years from now, this is going to go up. Profits will be around 100 million at this price. 100 million profits. Do a 5 times multiple on that, that's 500 million. Current market cap 50 million, that's a 10x. Okay. So that's the update on SOMA routes. I'll see you next video. Bye.